Welcome to Friday's Market Wrap-Up. My name's Matthew Buckley, call sign Wiz. I'm the primary model portfolio manager at Top Gun Options and also the chief investment strategist at Wealth Creation Investing. And folks, what a wild and awesome week it has been, not only in the Top Gun Options model portfolio, but the Wealth Creation with Options model portfolio. I love weeks like this. We talked about Monday that this was going to be a ginormous week. Why? Because of economic announcements and because in this post-QE3 infinity atmosphere, good news and bad news, I said we're going to be treated as, you ready for this? Good news and bad news. We just got hit with a slew of bad news. Okay, folks, 8:30 this morning, personal spending went up. Okay, well, that's great, isn't it? It is not. Look at personal income. It went down. So, folks, I'm not a rocket surgeon, but do the math. People are spending more than they're making. Does that sound like a recipe for disaster? Yeah, we've seen this play before, and it doesn't end well. Now, this number is absolutely stunning. Chicago PMI, kind of a manufacturing index of what's going on in the Midwest, has fallen completely out of bed. And it hit its head on the night table on the way down. It was 53. The 500-pound heads were looking for 52.9, 49.7, folks. And if you're a regular at Top Gun Options or WCI, you know that a reading below 50 on PMI indicates recessionary or a contraction in the economy, a recessionary environment. Folks, the last time the Chicago PMI was below 50 was September of 2009. Okay, so what's the market doing? Obviously, today, a day like today, bad news is in fact bad news, which is good because guess what? The market's starting to return to what they're talking about here. Some other just really ridiculous things going on around the world. This cracks me up. Hollande in France, the socialist that he makes Obama, Obama makes him look like a conservative, but this clown, 75% increase in taxes on the rich. Yeah, that should work, said nobody ever. If they're that rich, they're not that dumb, folks, and there's a whole lot of Caribbean countries or other countries with very favorable tax rates where these people are going to go, period. They're not idiots, folks. The rich got rich not because they're stupid. So this is not going to work. So this Robin Hood idea of taking money from those who built businesses, employed people, added to society, and giving it to people in France who just kind of hang out, sitting around, waiting for the government to do something. Hey, Obama gave me a phone. I'm voting for him. It's going to destroy nations. Period. That's all there is to it. And we're seeing it in the numbers, folks. We're seeing it in our nation. We're seeing it overseas. And it's just an absolute, it breaks my heart, but I just kind of laugh. I crack up right now during times like this. The VIX, seeing a big spike in the VIX today. And we're getting long. We're getting long the VIX again here. Here's a free trade for you. We're buying 30 of the OCT 15-18 call verticals. It's a bull call spread for a $1.20. Not getting filled there, but hanging out mid-market at $1.20 on this pop in volatility because the market's down 100 points. I think it's going to sell off a little bit more than this because we had a nice relief rally yesterday, didn't we? We Monday, Tuesday, getting a little bit of hammered. Wednesday, a little bit of flatness. Yesterday, a rally on bad news. It was funny. Monday, Tuesday had good housing numbers and some other good news, and the market tanked. And then yesterday, we actually had horrible housing numbers and durable goods and GDP. Absolutely horrible. The market rallied. And then today, the market's going down on bad news. So if your head hurts, you're not doing it right. It doesn't hurt here at Top Gun Options. Our model portfolio was up 21 grand yesterday. Now it's down $6,800. Yawn. Who cares? We're absolutely doing great because we're hedged. We have a bunch of positions on that hedge us that no matter which way the market goes, up, down, or sideways, we're fine. Okay, so the end of the world isn't going to hurt us, or if the second coming of Christ happens tomorrow, Monday when the market opens, we're also going to be okay. All right, so that's what you need to be doing, folks. You need to be hedged, and if you're flying around this market alone and unafraid, you're going to get wiped out. So here's what I want to do: go to this page, and I'll have the video redirect to this page. You can take a 14-day test flight for about $15. Okay, into our intermediate, and I'm going to throw it in primary. You get to trade with me live for 2 weeks for about 4 to 8 hours, and also with my volatility arbitrage trader, and watch as we manage our $100,000 model portfolios in real time. Okay, for $15, it covers the cost of my techies putting these pages together. So you're getting in essentially almost for a free trial for a test flight to let us prove what we're talking about, that we know what we're talking about. Again, people lie, numbers don't. Let's take a look at the model portfolio's month-to-date gain on $50,000 of capital of haircut employed folks, 25 grand. Again, I'm not a rocket surgeon, but that's a 50% increase in a month. Let's go back to March 1st, since I took over the model portfolio. Let's see how we're doing in the model portfolio since March 1st through right now, as of me talking. Model portfolio is up. Survey said $80,000 to $83,000. And again, that's about 160% return in, what's that, 6 months, 7 months, 6 months. So folks, if you don't know what you're doing, you're going to get killed. You're going to get wiped out, and you're going to have nobody to blame but yourself. And I don't want that to happen. So make sure you go to this page, take a $15 test flight for the next 2 weeks, because the next 2 weeks are going to be a repeat of this week. And what are we doing, folks? We're starting earnings season. And a lot of folks are coming out of the woods pre-warning, whether it's FedEx, Burberry, Norfolk, all these, the Dow Jones transports. Folks, Q3 earnings season is going to be an absolute train wreck. I'm telling you right now. Even though companies are rushing out right now to lower expectations, can't hit the ball over the net. Well, lower the net. So we're going to have to see whether they raced out fast enough, lowered expectations, and the market's taking that into account, or it's actually going to be worse than expected. I believe it's going to be worse than expected, okay? Folks, another report on tab for today that I want you to keep your eye on, University of Michigan Consumer Sentiment, and there it is, came in at, survey said, 78.3. Oh, boy. Folks, this is an incredibly volatile picture right here. People are making less money, they're spending more, and they have really bad expectations about going forward. Wow. That is it's 78.3, and we are at 74.3 in August. I mean, this is bad. Look at this. 79.2. The 500-pound brains were calling for 79, 78.3. Wow, what a day. Well, I got to get back to trading, folks, and managing our model portfolios, because this is going to be an awesome day trading options. All right, happy hunting. Make sure you hedge, and I'll see you for Monday's market outlook, because it's going to be a doozy. Again, having a blast trading here in the Top Gun Options and Wealth Creation with Options model portfolio. Again, get on board for a test flight, folks. If you don't, you only have yourself to blame. I can drag you to water, folks, but can't make you a drink. All right, got to go. See you. Have a good weekend.